The day you turned 65, the financial system in this country did not just hand you a Medicare card and a monthly Social Security check. It quietly placed your bank account on a default setting designed to automatically deduct taxes, premiums, and hidden fees before a single dollar ever reaches your hands.
And here's the hard truth that nobody whose job it is to collect that money will ever tell you. Qualifying for a senior exemption and actually stopping them from taking your money are two completely different things. Right now, in 2026, there are 4 automatic check deductions quietly siphoning money away from Americans over the age of 65. We are not talking about a few pennies falling through the cracks. We are talking about $200, $300, sometimes over $500 a month, vanishing from fixed incomes. Most seniors never even notice because the money is pulled out before the deposit clears their local bank branch. Number 1 on this list is hiding in plain sight. But number 3 is the one that genuinely bothers me as a financial guide, because depending on where you live, it is actually illegal to collect in 41 states. Yet, thousands of honest retirees are still paying it every single month out of pure habit. I need you to understand exactly how this bureaucracy works. The government and these financial agencies are never going to mail you a friendly letter on your birthday saying, "Congratulations, you are now exempt from this bill, so we will stop taking your cash." That is not how it works. They will happily keep taking the maximum allowable amount until you explicitly file the paperwork to make them stop. You could be doing absolutely everything right. You worked hard for 40 years, you paid into the system, and you carefully budget your grocery bill. But if you do not know the exact forms to file, you are watching your monthly check shrink while inflation climbs, paying bills you no longer legally owe. My name is Walter. I've spent years sitting across the kitchen table from older Americans, digging through their paperwork. I treat these automatic deductions exactly like what they are, a quiet leak in your retirement. By the end of this video, you will know exactly what these 4 invisible deductions are, and the exact phone calls needed to plug the leak. Let us start with the biggest one. The first automatic deduction is the one staring you right in the face every single month, yet most seniors just accept it as an unbreakable rule. It is your Medicare Part B premium. In 2026, the standard Part B premium is hovering right around $185 a month. That money is quietly scraped out of your Social Security check before the funds ever hit your direct deposit. Over a single year, that is roughly $2,200 to $2,400 completely gone. Most people just sigh, look at their statement, and accept it, assuming that paying this premium out of pocket is mandatory for absolutely everyone. It is not. Here's the truth almost nobody tells you when you sign up at the Social Security office. There is a state-administered program called the Medicare Savings Program, or MSP. If you qualify, your state will literally pay that Part B premium for you. They do not just discount it, they wipe it out entirely from your side of the ledger. That means that $185 stays inside your Social Security check every single month. It is one of the most powerful, immediate raises a senior on a fixed income can get. But millions of seniors who perfectly qualify are still paying the deduction right now. Why? Because of a massive, quiet misunderstanding about income limits. Seniors hear the word assistance and immediately talk themselves out of it. They sit at the kitchen table, look at their small pension or their paid-off home, and decide, "I probably make too much money for that." So they never even ask. Do not do that. The income limits for these programs are much higher than you think, and in many states, they have completely stopped counting your assets. Your savings account or that paid-off house might not disqualify you at all anymore. If your monthly income is anywhere near $1,800 for a single person or $2,400 for a married couple, you need to apply. Do not disqualify yourself in your own head. Let the state run the actual math. Every month you delay is almost $200 handed over that could have stayed in your local bank account to help pay for groceries or the utility bill. To fix this, you just need to contact your local state health insurance assistance program, often called SHIP. It is a free call, and they will screen you. But that is only the medical side of the equation. As expensive as that Part B leak is, the second automatic deduction happens before the check even leaves the Treasury, and it is entirely based on a tax myth most seniors believe. The second automatic deduction is one that genuinely frustrates me because it involves handing the IRS an interest-free loan every single month, straight out of your own pocket. When you first start collecting your Social Security check or a modest pension, you have the option to automatically withhold federal taxes. Many seniors set this up years ago. They base the math on what they used to owe when they were working full-time. And then, they just let it run on autopilot year after year, never giving it a second thought. But here is where the trap snaps shut on older Americans. The moment you turned 65, the tax math completely changed, and nobody updated your withholding to match it. First, the tax code gives every filer 65 and older an extra standard deduction. It is a completely separate bump just for your age. Second, there is a brand new senior bonus deduction worth up to $6,000. That is an extra $6,000, knocked right off your taxable income, stacked on top of everything else you already get. When you stack the regular standard deduction, the extra age 65 deduction, and this new $6,000 bonus together, a massive number of older Americans actually owe far less in federal tax than they think, and the exact 3 phone calls to make this week. But because they never updated that automatic deduction form, the government just keeps pulling $20, $50, or $100 out of every single monthly check. You are literally tipping the IRS with money you could be using right now to pay your property tax bill, or to fill up your gas tank. Think about what actually happens here. You let the government take your money all year long. Prices go up at the pharmacy counter, your utility bill spikes, and things feel tighter and tighter. Meanwhile, the IRS is holding onto your cash. Sure, you might get some of it back as a refund next April. But why are you letting them hold your money for free for 12 straight months? The IRS is not going to politely call your house and say, you know, you do not actually owe us this much anymore. They will quietly take whatever you offer them. The mistake most people make is assuming this deduction is permanent and cannot be changed. It is not. You have the absolute right to fix it today. The document you need is called a W-4V. It is a simple one-page form you file to adjust or completely stop that automatic federal withholding from your check. Let your actual tax return decide what you owe in April, not a blind guess at the kitchen table that drains your fixed income every single month. You have to protect your money right now, not next spring. The IRS will happily keep your overpayment until April, but the next deduction is even worse, because depending on where you live, the agency taking it might not even have the legal right to tax that money at all. The third automatic deduction is what I call a phantom tax. If the federal trap is a bad habit, this one is an absolute tragedy, because it is a deduction for a bill that, in most of the country, does not even legally exist anymore. We are talking about state income tax being automatically withheld straight from your Social Security check before it ever reaches your bank account. Here is the reality check that shocks older Americans every single year. Right now, exactly 41 states in this country do not tax Social Security benefits at all. Or, they offer such massive, generous exemptions based on your age and your fixed income that the average retired person owes absolutely zero state tax on that money. Let me repeat that, 41 states. That means the vast majority of you watching this right now should never have a single dime of state tax pulled from your monthly check. So, how are thousands of seniors still losing money to this specific deduction every single month? There are 2 very quiet traps. The first is that you moved. Let's say you spent your career in a state that aggressively taxed retirement income, so you responsibly checked the box to have state taxes withheld. Then you finally retired and moved closer to the grandkids in a state like Florida, Texas, or Pennsylvania, places that do not tax your Social Security, but you never officially updated your withholding paperwork. The federal system does not automatically cross-reference your new zip code and cancel the deduction for you. It just keeps blindly taking your money and sending it away out of pure momentum. The second trap is that state laws have been changing. Over the last few years, several states quietly passed new laws to stop taxing Social Security benefits entirely. But again, nobody mailed you a letter on your birthday telling you to update your direct deposit settings. The state government is not going to politely knock on your door to hand that cash back. If you asked for that deduction 5 years ago, it is still quietly draining your check today. You are literally paying a phantom tax. It is your money, shrinking right before your eyes, for a bill that legally vanished years ago. The fix here is completely under your control. You simply have to contact the Social Security Administration and update your withholding instructions to shut that state tax tap off permanently. Do not let momentum steal from you. Keep that money at the kitchen table where it belongs to cover your actual grocery bill. If you plug the federal and state tax leaks, you've protected the front door of your money. But the fourth deduction is sneaking in through the back door, and it's aimed straight at your medicine cabinet. The fourth deduction is the most complex trap in the entire system, and it is the one that genuinely punishes good, honest people for missing obscure deadlines. It revolves around two specific auto deductions that hit your monthly check: the Medicare Part D late enrollment penalty and the IRMAA surcharge. These are not standard taxes. These are bureaucratic penalties that sweep money straight out of your pocket before you even see it, and they can last for the rest of your life if you do not know how to fight them. Let us break down the Part D penalty first. When you turn 65, you are supposed to sign up for Medicare Part D, prescription drug coverage, or have proof that you already have other coverage that is just as good. If you miss that initial enrollment window, even by a few months, because you were healthy and did not think you needed a pharmacy plan yet, the system penalizes you. And here is where it gets incredibly expensive. That penalty is added to your premium, automatically deducted from your check, every single month for as long as you have Medicare. It is a lifetime punishment for a one-time paperwork delay. A senior in Ohio recently found out she was losing hundreds of dollars a year to this penalty, just because she had assumed her husband's old union plan counted as coverage when it actually did not. But it gets deeper. The second half of this trap is something called IRMAA, the income-related monthly adjustment amount. This is an extra surcharge stacked on top of your Part B and Part D premiums if your income crosses a certain threshold. It is automatically swept from your check. But here's the massive flaw in the system most seniors never hear about. The government looks at your tax return from 2 years ago to decide if you owe this surcharge today. Think about how unfair that is. 2 years ago, you might have sold a house, cashed out an old retirement account, or retired from a high-paying job. That was a one-time event. Today, you are living on a quiet, fixed income, clippy coupons for the grocery bill. But the government is still penalizing your check based on ghost money from a tax return that no longer reflects your real life. Nobody is going to call and tell you this is fixable. The people who beat this trap are usually just the people who knew the appeal form existed. You do not have to accept a permanent penalty. If you have experienced a major life-changing event, like retiring, losing a spouse, or losing a pension, you can file Form SSA-44. This form forces the government to recalculate that surcharge based on your actual income right now, not a 2-year-old memory. Filing that one piece of paper can strip the surcharge off your check entirely. And for that permanent Part D penalty, if your income is limited, qualifying for the extra help program I mentioned earlier can actually wipe that late penalty completely clean. You do not have to carry it forever. Knowing these 4 deductions exist is only half the battle. Now we are going to stop them. Here is exactly what you need to do tomorrow morning. You now know exactly how the system is quietly draining your monthly check. The Medicare Part B default, the federal tax over-withholding trap, the state tax phantom deduction, and the Part D penalty sweep. That knowledge alone puts you ahead of 90% of older Americans. But knowledge does not pay the utility bill. Action does. I am going to give you a rapid-fire checklist. You can do this at your own kitchen table, and it will not cost you a single dollar to file these fixes. First, to stop the Medicare Part B leak, you need to call your local SHIP office, the State Health Insurance Assistance Program. Do not wait for an open enrollment period. Do not try to guess your own eligibility based on the value of your paid-off house. Just call them and ask one specific question. Can you screen me for the Medicare Savings Program? It is a free call, they are trained experts, and if you qualify, that is roughly $185 staying in your check every single month. Second, to stop the federal government from treating you like an interest-free bank, you need Form W-4V. You can download this directly from the official IRS website. This is the voluntary withholding request. If you realize you owe little to no federal tax because of the extra standard deduction and that new $6,000 senior bonus, you use this form to adjust or completely cancel the automatic deduction. Keep the money in your local bank branch where it belongs. Third, the phantom state tax. If you live in one of the 41 states that does not tax Social Security, or if you recently moved to one, you must contact the Social Security Administration. You can do this online through your official My Social Security account or by visiting your local county office. Tell them you need to immediately stop all state income tax withholding from your monthly direct deposit. Shut the tap off today. Finally, for the Part D penalty and the unfair IRMAA surcharge. If you are being penalized based on old income from 2 years ago, you need Form SSA-44. This is the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form. You fill it out, attach proof that you recently retired or lost income, and you force them to recalculate your premiums based on your reality right now. And if you are carrying a late penalty for Part D, you go online to the Social Security website and apply for the Extra Help program. If you are approved, that late penalty is wiped out entirely. These forms are free, and you can file them yourself. You do not need to hire an expensive professional to check a box that belongs to you. Let me leave you with one final truth about your retirement money. Here is the ultimate truth about being over 65 in America today. The financial system you are dealing with is built entirely on silence. It is not necessarily malicious, but it is deeply indifferent. The federal government, the local county office, and the agencies quietly pulling money from your direct deposit every single month are never going to call you. They will not sit you down at the kitchen table, look over your grocery bill, and say, "You know what? You are paying us way too much. Let us stop taking your money." The system is designed to take the maximum allowable amount until you explicitly raise your hand, file the paperwork, and say stop. The older Americans who actually keep their money are not the ones who got lucky. They are not the ones with expensive accountants. They are simply the ones who knew these forms existed and took 10 minutes to fill them out. Stopping these automatic deductions is not a loophole. You are simply keeping the money you already earned over a 40-year career of doing everything right. If you found this information valuable, I need you to do one crucial thing right now. Share this video with one person you know who is over 65. Send it to a friend, a neighbor, or someone you used to work with. They are likely sitting at their own kitchen table right now, watching their monthly check shrink, paying a penalty or a phantom tax they have absolutely no idea how to stop. Nobody is going to knock on their door and hand them this information. You sending them this link might be the only warning they ever get. It costs you nothing, and it could put hundreds of dollars a month back into their bank account. As always, remember that this video is meant for general education, not personal legal or tax advice. Your specific numbers and state rules matter, so please confirm your situation with a local professional or your SHIP office before you make final changes. But whatever you do, do not just do nothing. Take control of your monthly check today. If you want to keep learning about the hidden financial rules and money traps that quietly affect older Americans, hit the subscribe button and turn on the bell. I will see you in the next video.